Hello there, welcome back to my YouTube channel. My name is Norma Obonna. I am a legal practitioner based and practicing in Lagos State, Nigeria. In this channel, we talk about everything that relates to corporate governance and compliance issues relating to companies in Nigeria. Today, we're going to talk about a circular released by the Central Bank of Nigeria. That circular is dated February 24, 2023, and it is headed Review of Tenure of Executive Management and Non-Executive Directors of Deposit Money Banks in Nigeria. I would want to read directly from the circular. It's quite a short one, but it's really loaded, so I would want to read directly from it so I don't miss any vital points. And then after reading the circular, I would then do a highlight of some of the issues I think that are interesting and that needs maybe a bit of extra light on them. So I'll just go ahead and read the circular. So the circular reads: the Central Bank of Nigeria has revised the regulatory requirements for the tenure of executive management and non-executive directors of deposit money banks and financial holding companies in the Code of Corporate Governance for banks and discount houses, reference FPR/DIR/CIR/GEN/01/004, as part of measures aimed at strengthening governance practices in the banking industry. Consequently, the following tenure requirements shall apply effective the date of this circular. 1. The tenure of executive directors, deputy managing directors, and managing directors shall be in accordance with the terms of their engagements approved by the Board of Directors of banks, subject to a maximum tenure of 10 years. 2. Where an executive who is a deputy managing director becomes the managing director/CEO of a bank or any of the deposit money banks before the end of his or her maximum tenure, the cumulative tenure of such executive shall not exceed 12 years. 3. However, for an executive director who becomes a deputy managing director of a bank or any other deposit money bank, his or her cumulative tenure as ED and DMD shall not exceed 10 years. 4. Non-executive directors, with the exception of independent non-executive directors, shall serve for a maximum period of 12 years in a bank broken into 3 years or 4 years each. 5. EDs, DMDs, and MDs who exit the board of a bank either upon or prior to the expiration of his or her maximum tenure shall serve out a cooling off period of 1 year before being eligible for appointment as a non-executive director to the board of directors. 6. Non-executive directors who exist from the board of a bank either upon or prior to the expiration of his or her maximum tenure of 12 years, that is 3 terms or 4 terms each, shall serve out a cooling off period of 1 year before being eligible for appointment to the board of directors of any other deposit money bank. 7. The cumulative tenure limit of EDs or DMDs, MDs, and non-executive directors across the banking industry is 20 years. So that is verbatim what that circular reads. So the first thing I would want to point out in the circular is the tenure limit that has been granted to the office of the executive directors, DMD, that is the deputy managing director, as well as the CEO. In 2010, the CBN released a similar circular as this, and in that circular, the tenure limit was granted just for the CEO. So for anybody that would that has been a CEO of a bank for 10 years, after the expiration of 10 years, the tenure has his or her tenure would have expired, and such a person would no longer be able to occupy such an office. But what has what this particular circular has sought to do is to extend this limitation to cover even executive directors and the deputy managing director. Also, there are quite a number of provisions in the circular for cooling off periods, and this cooling off period, in the 2010 circular, the CEO was mandated to have a cooling off period of 3 years after his exit from a bank as a CEO, before he can be eligible to join as a non-executive director of the bank. But however, this just like the limitation as relates to tenure, this cooling off period has now been required or mandated also of executive directors and DMDs. Now, in the 2010 circular, the cooling off period was stated to be 3 years, but now it has been reduced to 1 year. So when an executive director, a DMD, or a CEO leaves a bank, such persons must stay away for at least 1 year before they can be eligible for appointments to the board as non-executive directors. Also, the tenure of in the 2010 circular, the tenure of independent non-executive directors was limited to 12 years. But however, in what item was that? In item 4, the tenure of non-executive directors were limited to 12 years, and no mention was made of the independent non-executive director. So it would seem that the independent non-executive director can be on the board of the company for the maximum period of 20 years, which has been stated as the maximum period any person can be a director in the banking industry. So that means it can be said that an independent non-executive director can be on the board of a company for 20 years, since no mention was made of the independent non-executive director when the 12-year tenure limitation was being placed on other non-executive directors. Then I think I had mentioned the tenure limits. The tenure limits before now was granted to as it relates to the CEOs, but now it has been extended to not just the CEOs but to the managing directors and to the managing director, the deputy managing director, and the executive directors. So now I would want to speak to the 7th item on the circular. Says that the directorship career of anybody or any executive, or let me say any person in the banking industry, has been limited to 20 years. So whether you are an ED, you are a DMD, and maybe you rise through the ranks, you get to the office of the CEO, maybe you leave and then come back as a non-executive director, or you join another bank and become a non-executive director in that other bank, or an independent non-executive director anywhere in the banking industry, all of that sojourn must be done within 20 years. Once 20 years is over, that is it. So this particular provision has been heavily criticized because of the nature of banking, the banking business. It is a type of business that goes without saying that it requires a lot of expertise and experience. So by this provision, it means that quite a number of very experienced hands, very experienced persons in the industry would have to leave. They would have to live with their experience, even where they have the physical and mental capacity to still deliver, to still contribute to the banking sector. from the aspect of being non-executive directors, but because this limitation has been placed, a lot of them would have to leave. And I personally do not think that this particular bit of it would be in the best interest of the bank, albeit that there is a need to create room at the top for the younger bankers. But I don't think that it is wise to sacrifice expertise and experience at the altar of maybe just creating that room. I think that there is need for a balance to be struck, because in as much as yes, there is need for continuity, there is also need for growth. There is also need for young bankers to know that yes, one day there would be a place for us on the table at the top, which yes could encourage such persons to remain in the industry, instead of maybe running away to places where they feel that the options for growth are there. But it's also important that the expertise and the experience that these older bankers have is not just discarded and jettisoned just like that. So there is all a need for a balance to be struck in this regard. Also, there's been issues raised with regards to the effective date. Now the issues are, how do we calculate this 12-year or 10-year or 20-year period tenure limit as has been stipulated in the circular? Are we going to calculate it retrospectively or prospectively? At what point are we going to start counting from? Yes, the circular says the circular said it will be effective, or the circular will be effective from the 4th of February. But for the purpose of calculating 10 years, where do we start counting from? That circular did not speak to it, albeit that the 2010 circular was more specific on this issue. So I believe that in times to come, that the Central Bank of Nigeria would make statements that would clarify how this would go, or how the calculations would be made. Also, there has been arguments as to the applicability of the circular on the holding companies. Some persons have said that the holding companies are not banks, so that they cannot be bound by the circular of the Central Bank of Nigeria. But the Central Bank of Nigeria does not just regulate banks, it also regulates other financial institutions. And the financial holding company is one of such other financial institutions. And therefore, as its regulator, and being that these financial holding companies are licensed by the Central Bank of Nigeria, I very well believe and don't know that the circular as released by the CBN, once it has been mandated that its applicability extends to financial holding companies, so far as the CBN has mandated that, it would definitely cover, or it would definitely apply to such financial holding companies. So this is where we bring an end to our discussion on this topic. Thank you very much for staying with us. If you're a returning subscriber, thank you. And if you're seeing our videos for the first time, if you're yet to subscribe, please do well to subscribe, engage us, comment, like, and share our videos. And do have yourselves a lovely and productive time. I'll see you in my next videos. Thank you.